Hello, good morning, and welcome to another exciting time to talk about business. It is Business 360, and my name is Blyven Okem. On Business 360 this month, a Trump sweeping a new tariff take effect against dozens of countries. Let's begin from there. A US President Donald Trump's sweeping new tariff on more than 90 countries around the world have come into effect. Earlier, the president hit India with a 50% tariff. The tariff, which will take effect on 27 August until they stop buying Russian oil. Trump also threatened a 100% tariff on foreign-made computer chips as he pushes tech firms to invest in the US. It came as Apple announced a new $100 billion US investment after coming under pressure from the White House to move more production to America. Still under foreign scene, Apple today announced a new $100 billion commitment to America, a significant acceleration to its U.S. investment that now totals $600 billion over the next 4 years. Today's announcement includes the ambitious new American Manufacturing Program, AMP, dedicated to bringing in even more of Apple's supply chain and advanced manufacturing to the U.S. Through AMP, Apple will increase its investment across America and incentivize global companies to manufacture even more critical components in the United States. And now to Italy, as Italy cleared the way Wednesday to build the world's largest suspension bridge linking the Italian mainland with Sicily in a massive €13.5 billion infrastructure project that has been long delayed by debates over its scale, earthquake threats, environmental impact, and the specter of mafia interference. The Strait of Messina, the Messina Bridge, will be the biggest infrastructure project in the West, Transport Minister Matteo Salvini told a news conference in Rome, after an interministerial committee with oversight of strategic public investment approved the project. Salvini cited studies showing the project will create 120,000 jobs a year and accelerate growth in economically lagging southern Italy, as billions more in investment are made in roads and other infrastructure projects accompanying the bridge. Preliminary work could begin between late September and early October once Italy's Court of Audit signs off, with construction expected to start next year. Despite bureaucratic delays, the bridge is expected to be completed between 2032 to 2033, Salvini said. For almost 80 years, rare earth metals have been pumped out of this industrial plant in La Rochelle on France's west coast. But as the materials become more and more crucial to the global economy, a chemicals firm, Solvay, is expanding its processing plant next to the glittering Atlantic Ocean to meet surging demand across Europe. This group of 17 metals are essential to huge amounts of modern technologies such as smartphones, electric vehicles, and wind turbines and MRI scanners. However, around 70% of rare earths mining and 90% of refining happens in China as a result of years of support from the Chinese government. Europe, like many other parts of the world, is trying to reduce its dependence on importing these key metals from China. The future of Solvay's plant will be critical to those ambitions. In Africa, central banks in sub-Saharan Africa are accelerating their gold purchases to hedge against the growing macro instability in the United States and rising geopolitical risks around the world. While South Africa has historically maintained gold in its reserves, African countries, or some sub-Saharan African countries, are currently establishing domestic gold purchasing programs capitalizing on abundant local gold deposits, according to reports. Leading the trend is Ghana, which has launched its domestic gold purchasing program. According to BMI, a unit of Finch Group, both the volume and the value of the West African countries' gold reserves have surged, with Ghana's total gold holdings rising 255% from 8.7 tons to over 31 tons between the second quarter of 2022 and the first quarter of 2025. And earlier this year, Ghana signed an agreement with 9 mining companies to directly purchase 20% of their gold output at a 1% discount to the London Bullion Market Association price. Ghana's burgeoning gold reserves are also having a strong positive impact on the local currency, as a surge in gold prices has made the Ghanaian cedi one of the world's best performing currencies against the US dollar. Last year, Tanzania offered payment in local currency at a price published daily by the country's mining commission. Nigeria also launched its own national gold purchase program last year, and the country has passed legislation to strengthen the Central Bank of Nigeria's ability to acquire domestically produced gold, according to BMI data. Meanwhile, in Burkina Faso, the government has nationalized gold mines and established a national gold reserve with the goal of stockpiling a minimum of 5% of annual domestic production, while Zimbabwe recently launched a gold-backed currency, the Zimbabwe Gold, in an effort to stabilize the country's financial system. Still in Africa, looking at financial concerns in Africa, amid George Frick's assessment and inaccurate perception of default are costing African countries billions of dollars annually in inflated borrowing costs and lost revenues, according to the president of the Africa Financial Corporation, Samaila Zubairu. These default rates are really exaggerated. The pressurized Premium Africa has paid is $75 billion annually, and that is a lot of money, Samaila Zubairu said. Research by Moody Rating last year revealed that Africa's sovereign default rates are largely consistent with those of similar rated countries. Its debt trades are wider spread, indicating that investors are pricing in additional non-fundamental risks, according to Bloomberg. World Bank data further shows that between 2010 and 2020, Africa recorded the second lowest default rate on infrastructure loans globally. Despite this, African debt continues to attract high yields. At the same event, Ndidi Okonkwo, president of the One Campaign, noted that bondholders earn an average of 9.8% on African debt compared to 6.5% for Latin American bonds. For the last 3 decades, return on infrastructure investment in Africa was 6 times that of the S&P 500. Okonkwo said yes, and there is risk, but there is return. In Nigeria, and there is confusion over the alleged takeover of ownership at Ikeja Electric, Beam Power, KEPCO, Energy Resources, and Independent Power Limited by Nigerian banks and other parties over debts. And there are reports that Lagos High Court, presided over by Justice Akintayo Aloku, handed a receivership ruling on August 5, 2025 to the power firms based on that debt agreement in the 2013 suits. However, in a statement by Ikeja Electric Chief Legal and Regulatory Officer Babatunde Osadere, he dismissed the report that the company slid into receivership. According to him, the court ruling rather restrained the lenders and their purported receiver and managers from taking any adverse actions. Beam Power PLC, First Independent Power Limited, and Ikeja Electric PLC are not in receivership, and their assets, businesses, or undertaking are not under the management of any external receiver, manager whatsoever, he said. Meanwhile, as the confusion lingers, the development worsens Nigeria's power sector crisis since the 2013 privatization process. Still in Nigeria, the National Publicity Secretary of the Petroleum Products and Retail Owners Association of Nigeria, Joseph Fubele, has disagreed with the decision of the Nigerian National Petroleum Company Limited ruling out the sale of Port Harcourt Refinery. In his personal view, as a community stakeholder in Port Harcourt, Obele said he strongly disagreed with the Nigerian National Petroleum Company Limited and the decision to rule out the sale of the Port Harcourt Refining Company. Obele stated that the comment by the Group Chief Executive Officer of the Nigerian National Petroleum Company buyer Ojolari, that the refinery would not be privatized was not good enough, saying plans to keep the Port Harcourt refinery under NMPC management are concerning. According to him, private firms tend to prioritize the interests of host communities, unlike the government-owned ones. That is where his concern is. Still in the oil sector, and barely 48 hours after increasing its pump price, the Nigerian National Petroleum Company Limited has slashed the cost of premium motor spirit petrol at its retail stations to 900 naira per litre, down from 955 naira per litre. The 55 naira price reduction comes just 2 days after the state-owned oil firm raised its pump price to 955 naira, citing market volatility. On Monday, NMPC retail outlets jacked up prices to 955 naira in Abuja and 915 naira per litre in Lagos, a 50 naira increase from the previous price of 865 naira per litre due to increased depot price. The latest adjustment underscores the unstable nature of the downstream market amid fluctuating ex-depot prices. And now to oil taxes. Improved crude oil production and better compliance from oil companies have pushed Nigeria's oil tax revenue to 3.69 trillion naira in the first half of 2025. This represents a 41.7% increase over the 2.604 trillion naira collected in the same period last year. This is according to an analysis of the Federation Account Allocation Committee's monthly report and the latest revenue performance figures presented by the Federal Inland Revenue Service at the monthly Federal Allocation Accounts Committee meeting. According to presentations and reports between January and June on Tuesday, within this period, crude oil production increased to 1.8 million barrels per day, reaching the highest in 4 years. Within this period, crude oil production increased as the set rate, reaching the highest in 4 years. The oil tax collection comprised petroleum profit tax, hydrocarbon tax, and company income tax from oil and gas companies operating in Nigeria. Still in the oil sector, the Nigerian Upstream Petroleum Regulatory Commission has said that the 2020 open oil blocks scattered in various onshore and offshore basins across the country would be handed to concessionaires after periodic bid rounds and conditions are met. The oil blocks remain dormant despite Nigeria's global debt burden and crude shortages affecting local refineries. The NUPRC data showed that a deep offshore terrain accounts for the highest number of unlicensed blocks at 59, highlighting the country's underexploited energy wealth in its most technically advanced but capital-intensive region. The Benue Trough follows with 41 open blocks, while the Chad Basin hosts 40. In the Sokoto Basin, there are 28 blocks yet to be awarded, and the Bida Basin has 16. Even in more mature areas, idle blocks persist. And now to the telecom sector, as Nigeria's telecom regulator has introduced a new government framework for operators, as the country's telecom sector recorded a sharp decline in foreign direct investment in the first quarter of 2025. The new rules unveiled by the Nigerian Communication Commission on Wednesday seek to strengthen board oversight, risk management and transparency across Nigeria's $70 billion telecommunication industry, which serves more than 170 million active subscribers. The guidelines will be enforced in phases and apply to all licensed operators, the regulator said. The guidelines will be enforced in that direction, and operators are licensed apply to all operators and regulators. The rollout comes as the telecom industry reported $80.78 million in foreign direct investment during the first quarter of 2025, down 58% from $191.57 million in the same period a year ago. Meanwhile, foreign investors sold off equities worth 576.09 billion naira on the Nigerian exchange between January and June 2025, representing an 84.97% increase from the 311.41 billion naira within the period comparatively to 2024. The outflows exchange of foreign inflows which stood at 559.25 billion naira, resulting in a net negative foreign portfolio position of 16.84 billion naira over the 6 months. The figures contained in the NGX June 2025 domestic and foreign portfolio investment report shows that foreign trading activity has intensified compared to the same period last year. A total foreign transaction reached 1.14 trillion naira in the first half of this year, and more than double the 540.48 billion naira recorded in the halfway of 2024, according to multiple reports. And now we'll go on a quick break, and when we're back, Business 360 continues looking at global economic standings and the markets. Don't go anywhere. Welcome back. It's your Business 360, and my name is Blyden Kim. And now to global economic standings around the world, looking at the case of China as exports accelerate, import rise the most in a year. China's export rose 7.2% year on year in July 2025, a quickening from 5.8% in June and marking the fastest pace since April as firms rush shipment ahead of the US tariff deadline in August. Meanwhile, imports grew 4.1%, defying forecast of a 1% decline and posting the strongest gain in a year, boosted by Beijing's ongoing stimulus efforts to shore up domestic demand. And now to the currency market, the state of the naira, as the naira continued depreciation against the dollar at official foreign exchange market on Wednesday, for the second time this week, despite rise in Nigeria's external reserves. The Central Bank of Nigeria's exchange data showed that the naira further weakened to 1,534 naira 44 kobo against the dollar on Wednesday and down from 1,533 naira 10 kobo traded on Thursday. This indicates that our country's currency dropped by 1 naira 34 kobo on a day-to-day basis. Meanwhile, at the black market, the naira remained at 1,565 naira per dollar on Wednesday, the same as on Tuesday. Quickly, let's go to the market first. We'll look at the US dollar against the naira and afterwards other commodities. The US dollar against the naira. Multiple pictures while we're anticipating the market. We'll also look at the cryptocurrency market and the Euro USD market. A Bitcoin market first indicates a price level of 115,032 US dollars, upward by 3 points. Ether gaining 45 points, and Binance gaining at this point Binance dropping 4.1 point at 766 US dollars. Cardano, Solana ripples a little here, a little there. Let's look at further markets. Looking at the commodity markets in that line too. Energy market as well as agricultural commodities. Energy market indicates the price of crude oil at 64 US dollars per barrel. Not much of a significant change, but gaining 0.44%. Brent, Nigeria's price benchmark, at 67 US dollars per barrel, upward this morning. 0.254 point natural gas, gasoline, heating oil, or having their prices on a weekly basis has been a struggle in the energy commodities and our agricultural commodities. Agricultural commodities indicate the price of soybeans 960 US dollars per bushel, upward 0.93 points, and wheat price 511 US dollars per bushel, upward 3.14 points. A lumber price gaining or not gaining, rather losing this morning, a negative 2.05 percentage decline. Palm oil losing 0.87 percentage decline. And now to the metals as we set to close. A metal market indicates the price of gold at 3,376 US dollars per ounce and silver price at 38 US dollars per ounce. Gold and silver gaining 0.23% and 0.9% respectively. Copper price also on the positive, 0.5 percentage gain at 4.4142 US dollars per pound. A steel price at 3,231 Chinese yuan per ton, gaining 4 points, rather on the percentage base, losing a negative 0.12%. Well, it's a direction that comes with the market this morning. Here we draw the curtain on today's edition of Business 360. Thank you for being a part of it. My name is Blyden Lukem, and thank you for watching.